Hey everyone, stick with us versus herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we go live, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord, along with our free options trading group on Facebook. If you're here right now, say what's going on. Market's just about closing here. We got about 9 minutes till market close. S&P's down 6, Dow's down 146, NASDAQ is down a buck. Yo, Tobin, Keith. So right now we're looking specifically at Netflix. I'm going to be going over my trades as well, kind of show you what's going on. I actually was gone all day. I've been kind of been struggling a little bit with my schedule, and last night my internet was down, so I couldn't post any videos. Just one thing after another. You know? People probably thought I was like taking an extended break or something. Got me drinking Coke, got me in my feelings. All right, so expected move right now is $28 on Netflix. So right now it's kind of middle of the range here. I mean, this could go either way. The only thing that might be worth it is that because Netflix has been ripping pretty consistently, might try to fill this gap. I don't think I would. I don't know. I was looking at like an Iron Condor situation here, but I mean, I'm not in love. Let me show you what I got going on over here. So, Iron Condor situation. Keith, Tobin, Jeff, David. You know, if you're looking at selling some premium up in here, looking at something like this. You know, something along the lines of like the 310, 365. But the issue, what I don't like about it is if we look at the chart here, if it runs, I mean, I think it's going to go, if they smash earnings, I mean, this could go to 370. And then if they do really well in earnings, not only will go to 370, I do think it's going to break, you know, within the next week or two, could run to 400 if it gets a little crazy. Yo, David, I'll show you my BA position. I'm already down and out on that thing. I already wrote it off mentally. I think BA. I'm gonna go over all my mistakes on that Boeing trade and kind of some of the psychology behind it, because I think it's important to understand why you do certain things or what do you know. So I'm gonna show you guys. We're gonna go over BA probably after the Netflix earnings as well. Anybody playing Netflix for earnings right now? No, I don't want to update. I know some people were looking at some Iron Condor and stuff. So right now we're waiting for the earnings to come out for. I don't know if there's any expectation. They're trying to find some information on Netflix. Right here, let's see what they're expecting here for Netflix. So they're expected 53 cents expected, 5.45 billion expected written revenue. So paid subscribers, so the subscribers are going to be like the most important thing here. So paid subscribers are 589,000 for the U.S. and then international, they're expected to have 7.17 million new subscribers. So that's going to be interesting here. Going to see, this is going to be the first quarter that Disney Plus has been active, that Netflix is doing earnings. So right now I do have a Disney 144 call for next week expiration. I'll go over my trades here. I mean, I'll show you some of the. We have some good and we have some good and we have some bad today on my P&L here. You know, good, Roku good, Boeing terrible, Shake Shack is kind of just hanging in there. Disney's just kind of hanging in there as well. Soybeans we're hoping for a break of 900 at this point. I mean, if you want, I mean, you can do something a little bit more risky on Netflix. You can do, you can do more like at the money, but it's pretty risky. I would say it's pretty risky. I don't generally like to do it on higher price stocks like this kind of thing because Netflix. So the one thing that has scarred me for life on Netflix is is actually I don't usually trade Netflix earnings anymore because quite a few years ago I I put on Iron Condor on Netflix for earnings, and I didn't really. I guess I was trading pretty large for my experience, and within a few minutes I lost $1,500, and then I've discovered that it didn't really matter what I did. I mean, if I bought calls, it would have been fine or whatever. I don't even remember if it dropped or ripped up. All I know is it went beyond the expected move by like 3 times the expected move, and that was my first time that I realized, you know, you have to be careful selling options. I mean, I'm selling options. I've made a lot of money selling options, and going, and sometimes you get a little too cocky, and that was one of the we'll cover that today as well in terms of Boeing. And you got a little too cocky. Like I think one of my biggest months selling premium, I made about $10,000 selling premium, and it's because we just had so much bullish momentum when it was I would say fairly easy. But when you get into that mindset, like kind of like what we're in now, where we just like buy the dip, it's so easy to make money. Buy the dip, it's so easy to make money, that we start to get trained to get lazy in terms of our trades. We get lazy. We just look for dips to buy, and we just buy them, and then there's really no reason for it to keep going up, but it does. So we just keep doing the same thing until we're trained to do that, and then the market shifts, and then what happens a lot of times is you kind of like what I did with BA. I'll show you that. But when the market shifts, then you keep buying the dip, keep buying the dip, keep buying the dip, and then sooner you know it, a week goes by, 2 weeks goes by, a month goes by, and you lost quite a bit of money because that strategy you didn't adapt, you didn't change. That strategy was no longer working, but you thought because you were behaviorally trained like that you thought that was going to kind of snap out of it. Having 1 down day, 2 down days, 3 down days, you keep buying, keep buying, keep buying. On the 5th or 6th day, you would have recovered all that and then some. So it looks like we're having a little bit of volatility here on Netflix. So buying the dip, I don't necessarily, I'm doing it, but I'm very cautious. And buying the dip is just a very lazy way to trade. It's the same as like shorting the rip. You have to have some sort of reason to put the trade on other than buying the dip and shorting the rip. It's there has to be something else there. I don't know if anyone agrees. But market's about to close here. I'm just gonna post one thing here real quick. Hold on one second. Juggling a couple computers here. Okay. All right. So market just closed. Let's see if we can get some information. Looks like numbers haven't come out yet. I'm also going to be doing a watch list video, and we're gonna cover actually all my trades. Yo, James, if you're here right now, say what up. After the Netflix earnings, so we'll see what happens here. Okay, pop the 345. Let's see what happens here. 352. Get your popcorn ready. Let's see if the option sellers are going to be making any money today. So I'm going to put this trade on that I was looking at here. That's at like 350, 342. Okay. Not seeing the earnings out yet, so we'll see. We'll see what happens. Did have a Roku trade on today. Daniel, I do not. I had Roku going into today, and then I had I put on a Disney call. I don't like to trade. I don't know if you were here for that. I don't like to trade Netflix earnings. You got like, it's all mental. You know, this whole trading is mental. You know, you get scarred, you get some like PTSD from bad trades, and you, instead of learning to adapt, sometimes you just kind of stay away from it. It's kind of interesting how our behavior makes us or breaks us as traders. You know, I've been spending a lot of time looking at the psychology and the behavioral side, and it has more of an impact than what most traders think. Most people think that you can have, you just have to be knowledgeable on in the market, and be knowledgeable and know what certain things mean and what to do. But it comes down to it, I feel like a lot of money's made, a lot of money's lost due to the person itself, or your personality, and how you react to certain events, when you're winning and when you're losing. Yeah, they did they did halt it. I was really surprised that they halted that thing. It wasn't down that much. I mean, what was Boeing down? Yeah, I mean, it came down. It was only down. It wasn't even down 10%. Oh man, Netflix 331. Yo, where are the numbers for Netflix? Where are the numbers? CNBC doesn't have them yet. Started going live a little bit early so we can see what's going on here with earnings. I'm trying to find if there's any numbers out yet. I don't think so. I had 30 puts and I was up 1,300 when it came back. Lost 300. Well, 300. Yeah, I'm down about 900. I'm gonna go over. After we see what Netflix did here, I'm going to go over my trades and my P&L for today. I didn't put any. I didn't really trade today. I was gone pretty much all day. Unfortunately, missed some opportunities, but there'll be some opportunities tomorrow. Q4 EPS $1.30 beats by 77 cents. Jeff from Seeking Alpha. It's taking a long time for these other guys to put their earnings together. It's kind of interesting. Okay, it looks like. Okay, we're in. We're in. Netflix has just reported, or CNBC. Let's see how that. Results 5.47 versus 5.45. What are those subscribers? They didn't update all of this yet. I want to see where the subscribers are at. Yo, WeWorks is all good. We need to see where guidance. We need to say where guidance is. So we need a couple things here. Subscribers. Right now it's at 330. Netflix is at 333 right now. So subscribers and guidance, where are you? Update. How it's not. Man, these guys are slow to update. It's at 328 right now. So right now it's still within the expected move. So the expected move for Netflix is 27 bucks, $28, and we did say 312, 350, 310 within the expected move on the down, and then 365 on the higher side. So if it stays here, you probably would have made money selling some premium here. It's high risk. I mean, Netflix is high risk for selling premium because I feel like it goes beyond its expected move all the time for earnings. Netflix added 550,000. That's probably why they missed that, because they were expecting 589. Well, IBM had earnings as well. So Netflix added 550,000. That's the issue. So, even though they beat on revenue and stuff, Netflix moves on subscriber growth. Like Wall Street places subscribers above all else. They could have lost they could have lost a bunch of money this quarter and beat subscribers, and the stock would have went up. Oh, you saw it on CNBC closing bell? Yeah, I'm not really allowed to play shows like that. It would be cool if we could, because I'm not really allowed to because of the copyright. They'll come after me. They say, no, you can't be taking content from CNBC or whatever. Here we go. They just updated it. Yep, you're right. 550,000 versus 589. They didn't update the international subscribers yet. Man, these guys get on it. Anybody here trade Netflix? Anybody had any positions on there? But it looks like it's staying right within the expected move right now. For the downside, the bottom of the expected move was like 311. So it's well within the expected move. Sorry, Keith. Would have been good. That's why we need. All right, let's see what IBM is doing here. We're talking about earnings. IBM. Man, wow. Let's put Netflix over here, and we'll bring IBM over here. Yeah, IBM. Look, how about that? Close at 139 at 146 right now. So it's coming up on resistance here. See what happens. Well, that's actually a really big move. Pretty much closes the gap from the last earnings miss. I wouldn't have expected. I didn't trade it. I wouldn't have expected IBM to do good. But it's the stock market. You can expect anything. So they beat by 3 cents. Looks like IBM shares are up 3% since the beginning of 2020. Everything's up like 3 to 5% since the beginning of 2020. Doesn't mean anything. But yeah, that's not really updated. Kind of lame. Oh, here we go. Yep, 4.71 per share versus 4.69. Revenue beat. The biggest problem that I see with like CNBC earnings and stuff like that is they do an article, and then before, to capture the traffic, and then they just update the same article, but it's not like quick enough, I feel. But I guess that's why you like watch them on TV, I guess. Netflix is basically flat, unchanged. I mean it's down $5, but that is crazy. Could have sold some premium in there. How about that? IBM. Who else had? Anyone else have earnings today? Let me check here. United Airlines. United Airlines has earnings. I don't think they've come out yet. I don't think their earnings have come out yet. United Airlines. Yeah, it's supposed to be coming out after close here. IBM, the expected move was $6. Let's move $6 now. Check Disney. Disney is currently unchanged. Closed at 143.56 and it's currently 143.56. So I currently have a 144 call on Disney for January 31st. So I was thinking that Disney was going to be impacted a little bit, but not even a penny. not even a penny. But the one thing that I do like about Disney, I'm just going to pull this up here, is my expiration on Disney. Looking to see if we can get even if it went against me, I like this position because it'll probably run up before earnings, and I'm trading the expiration before, so I'm trading the January 31st, and the earnings are February 4th after the bell. So Aaron, J&J had Johnson & Johnson. I think Johnson & Johnson is what, tomorrow? Was it now? Let's see here. Thought it was. Yeah, Johnson & Johnson's going to be tomorrow morning. So before market, Johnson & Johnson's going to be before market open. I don't know why it says there's going to be a conference call today at 7:30 a.m. I think that's messed up. Because on here it says earnings are January 22nd. And I'm showing that they're up before market open. UVH needs a website. We got a website. We actually got some cool things rolling out. So now that Netflix is chilled, IBM is chilled. Let's go through my P&L here. Kind of show you what I did today. My P&L is kind of disgusting right now, mostly due to Boeing, of course. But I did it to myself. I'm pretty much I'm down 95% on Boeing. Pretty much max loss on Boeing. I've been holding for quite some time, but did take some profits off of Roku. Made 180 on Roku today. Shake Shack is looking decent. Disney, I'm down $18. So, and soybeans we're just gonna let ride. Got another 30 days on that bad boy, so we'll see what happens. We'll see what happens with the soybeans. At this point, it's 9:15, and soybeans. I have the 880 put and the 1,000 call. So right now, we're coming into profit territory on the put side. Call side's gone. It was leaning bullish, so now it's just going to take some time to get to where we want to go. So for the soybeans, I'm looking. If we can break 900, it would be ideal. within the next 30 days. I think it can happen. It's been moving down quick. Like today was a big drop, but let's go into my trades for today, and then I'll talk about Boeing. And only a couple trades today, Roku and Disney. So Roku had a trade on since last week. I had the 129 call I put on the 16th, so that was last Thursday. So last Thursday, I put on the 129 call. I was actually down in that position. And it's kind of interesting here. Let's show you Roku. 129 call. I had it for this week expiration, so didn't have a lot of time. It's pretty deep in the money now. Jeez. Okay. So I bought it on January 16th for $4.90. It was actually down some money. I sold it today for $6.70, and I sold it at 10 minutes into market open, mainly because I said I'm going to sell this spike here, and I sold this candle right here. But if you look here the last couple of days, it's been kind of rocky. Netflix, we came up to $6, but then we came down to $3.57 as a low, and then it ripped on this. So I sold. I'm definitely glad that I sold this candle. I didn't squeeze all the juice out of it, but it expires on Friday. We have one less trading day this week. Booked the profits and moved on. But yeah, I sold at $6.70. This one as high as like $8. It did touch 9. So that's pretty crazy. Well, Andres, you did a good thing, because it looks like that call is going to be worth less tomorrow. Even if it opens up here, like even if it opened at 340, you're probably going to be losing money with the IV crush. So Roku is a good trade. I still like Roku, still on my watch list, because it's coasting around here like 135. It was bouncing around the 130 area a few times, bounced back up. So we'll see what happens here. It's still downtrending, so you got to be careful of that. But I've just been playing the support and the resistance. And then today, kind of a Netflix play. I did get the Disney call for $1.91. I do have it for January 31st, and I have the 144 call. Now, getting into Boeing. Boeing was probably, obviously, it's going to be the biggest loss of 2020 for me right now. Currently down 980 on that, and a couple things that I want to point out here. Let me pull up the trades. Okay, so only pay attention to these two trades. These other trades, I made money on, but these two trades are the ones that are in question right now. These are the ones in my account. It's a 332.50 call, and Chathan, how you doing? Boris, I just using RSI and this volume right now. But now Boeing. Now I've had quite the win streak on Boeing, which was kind of the first thing you need to be cautious of when you're on a win streak with a stock. You shouldn't start layering more in. That's when you start to be more cautious. When you're trading very, very, very well, you have to start thinking about pulling back and being more cautious. Because I had quite a few great, decent trades on Boeing this year. I had a lot of good trades on Boeing in December, and I really didn't have any major losses or big losses on Boeing. I was trading it very well. I was able to see the stock for where I believed it was going to go. It hit my targets, and I layered into the 332.50 call on January 13th. So this was on Monday. So last Monday, over a week from today, and I bought the 332.50 call. Now the first mistake. Let's go back to 10 days here. So let's go back to this Monday here. Now the big mistake that I made, so I bought it here at noon. The biggest mistake was when I made this trade, I placed a 50-50 bet. And what I mean by that is, let's focus in on this day. So I put a position on at noon. And because it was kind of consolidating, it was pushing higher, consolidating, there's a 50-50 chance that it's going to rip higher or come back down into the 330 support. I placed my bet saying it was going to move higher. Rest of the market was moving higher. Boeing wasn't really. It was just playing catch up, and then it didn't. So the first mistake was I should have cut it. I should have cut it in here. And I bought the 332.50 call for 650. Much better entry to wait for the 330 because, of course, the next day it ripped up. I was actually profitable on it up in here the next day. Last Tuesday, I was profitable on it. Didn't take my profits, and it fell. And then that was pretty much the last time it was profitable. So I would have made some quick money, even though my entry was poor. The second mistake was riding that position for so long. Like I've been riding this position for over a week now. It expires this week, and when you're trading options that like out of the money and stuff like that, when we get closer, I mean, I'm going to be losing money faster. So made a lot of mistakes. I made a lot of mistakes with this one, and I think the going into Boeing. Let me show you on the 1-year chart is because I've been trading the support and resistance off of Boeing, and now we're obviously below that. We hit a 52-week low today, but I've been trading it around 325, 330 since December. Ever since it came down here, I would buy in here. I would sell at like 335. I would then reload, sell at 335. So when you have something going like that, you have to, after a long period of time, you have to start thinking to yourself, for how long is this going to work for? Because sooner or later, the range is going to get tighter and tighter and tighter. And I just kept playing the same trade over again and again and again. So I then averaged it down on the 16th when it was kind of going against me because I still believed in the trade. So that, what day was the 16th? It was on last Thursday. So last Thursday, so right in here, because we were just pretty much riding 330. We were just riding 330. Now, if I was more patient and I bought the 330 calls, there was many times I'd be able to exit that position. It was riding 330, hit 335 once, hit 33, hit 34 here. It's hit 330, 333, 334, 335 multiple times in the past week until we obviously had a major breakdown on Friday. And I think that having that win record on Boeing and feeling a bit overconfident about that 330 support, and then when it broke down, I was thinking, okay, it's probably just going to bounce back. And then we had bad news again today. So, at this point, I think that I don't feel bad that I lost the money. I just wanted to analyze why I didn't, and it was mostly psychological. It's not because that you're a bad trader or that why you lose money or why you do certain things. I mean, you're going to lose. You can't win every single thing, every single trade, but you should analyze, what went right, what went wrong, after having these wins, these recent wins, kept rolling in. These were the 330 calls. These are all the 330 calls you can see here I was making money on. And then I traded the 332.50 calls and we lost our money. So, with Boeing, right now we're just going to have to wait and see. I don't know if we could trade it for earnings now. But you have to. I think one of the things as being a trader is trying to not beat yourself up about losing positions. Yes, you're going to lose. you need to analyze it from a business perspective, so that way you can make a good decision moving forward. A lot of people, what happens is they get upset when, let's say, a drop like this happened on Boeing, right? And they say, oh, the market's out to get me, or, oh, if so and so didn't put that news piece out, my position would have been fine. And there were in the last week, if you were long, there were a lot of times you could have got out. There are a lot of times you could have got out. You could have got out when it broke trend here on Friday. When it broke right here, the 329, could have got out. Could have got out right here. And if you want to be long, you could have reloaded at any time. If you really wanted to be long. But the bad news just keeps rolling out for Boeing. So for me, for now, I'm gonna have to take a step back from Boeing. When you suffer a max loss like that, you need to take a step back, trade some other stocks, come back to it in a month, a couple of weeks, whatever it takes for you to kind of clear your head. But the plan that I had is obviously no longer going to work on Boeing, and you can't just keep milking it. Yes, you can make money on it, but sooner or later, as you can see, it catches up with you, and you just have to be responsible. Like if you're repeating trades with that, a lot of times you can. Like for Boeing, we've been rinse and repeating, and it's been working out great until it doesn't. So we just need to be more cautious. Like right now, like I was saying at the beginning of this video, if you buy the dip, sooner or later, that's not going to work. Where you can't just buy the dip and and you're gonna make money. Right now, literally, we can buy any dip and make money. I mean, it's ridiculous, right? Except for Boeing dip, probably. But sooner or later, it's gonna catch up with you. All the buy the dippers, and that's why we're going to have a lot of volatility when the stock market does head south, and we'll have a red month. The market will have a red month, maybe a red couple months, and the buy the dippers are going to keep buying the dip, keep losing their money. And if a trade, like I said, if the trade is working out, like you're hitting your targets left and right, you need to start being more cautious and start scaling back instead of scaling up. What most people do is they start scaling up because their win rate is improving. They're feeling overconfident. So they're saying, oh, instead of deploying $500 in capital, I'll start deploying $1,000 of capital. Oh, instead of deploying $1,000 of capital, I'll start deploying $2,000 in capital, until you start amassing, and then you have these, you've been winning, but then it's going to result in big losses, and then you're probably going to give up a lot of what you made. So what's the point? So right now for me, I'm going to hang back on Boeing. I do think it's still one of my stocks that I am interested in buying in 2020. I do think this is going to clear up for the long term, but for the short term, we just got to be careful. Yep, literally Netflix. This is the most flat I've ever seen Netflix earnings. Like, it's terrible. All that premium. People are gonna be pissed. I thought that Netflix is probably gonna go up, but here we are. Netflix is up $3. IBM's up more than that. IBM's up $6, going on $7. What other trades we got in here? And then the only other trade right now I have Shake Shack. I have the 70 call, and I'm short. I have a debit spread. I have the 70 call. I'm short the 75 call for February 7th. So 17 days out. So that's kind of just chilling right now. Shake Shack. I do like that it's holding 70 pretty good. It keeps wanting to bounce below. So Shake Shack's been wanting to bounce below. Bounced down to 66 the other day. Came back up to 70. Was flirting a little bit with 71 here on Friday. And then today was kind of flirting between like 69 and 71 the whole day. We were just kind of pinging back and forth. So I have the Oxy 40 put for March expiration. take a look at that. If you guys want to do me a favor, hit the like button. Definitely appreciate it. It looks like the 40 put looks like a good bet. Here got rejected at the 47.5 right in here. Came back down. Just gotta hope that the selling accelerates. You know. Baidu is good short opportunity. Boris. Yeah, the Chinese stocks, I think it's hard to value the Chinese stocks right now because they were so pressured by the trade deal that they are potentially undervalued. Like Nvidia, and Nvidia's been consolidating. Baba. I don't like these types of setups. But yeah, Roku was the winner. Roku was definitely the winner today, but I mean, still downtrending though. So you want to be careful. Beyond as well. Beyond did really well. Based on, I think it was news that Starbucks was going to be rolling out some plant-based options. Let's see here. News. Beyond news. So now this is kind of weird. Shares of the meat alternative company popped on news of a potential relationship with Starbucks. So you want to be very careful about trading that news because nothing's locked in. You know, yeah. Yo, squids, imagine anything. What's going on? So you want to be careful about potential because this will probably fall apart. You know, says that though Starbucks didn't name Beyond Meat, investors nonetheless took it as a bullish signal for the purveyor of fake meat. So it was just like an industry move. They're thinking if Starbucks moves into this space, they're probably going to get who are their suppliers, Impossible and Beyond, right? So I would be careful. I would be careful about buying this. I wouldn't say like go short, but you want to be cautious. I have stock in Beyond, just full disclosure. Average is like 93, so I'm not hating on it, but I don't. That news is suspect. Uber. So Uber was moving today because they sold their Uber Eats business to their Uber Eats India business, not Uber Eats. Uber Eats India business. They've been struggling with it. They sold it to their competitor in India, but now Uber has a 9% stake in their competitor. I don't remember what their competitor's name is, but on the chart, I do like the chart. You know, we broke above the 35 resistance and 36 resistance. Now this is starting to turn into more of a bullish chart. Now if this falls back down here, I would start using some caution. But right now, if it can hold above 36, I mean we're in the good. We're in the good to go back into the 40s. You know, implied volatility is pretty low right now, so you get some pretty good options. February 6th earnings, so we have some time. Could play a run up into earnings. Yeah, Sage, we've looked at a few times. I actually still, Tobin, I still have my alert here for Sage for 79.80, which is, it didn't trigger. It didn't trigger. I still have my alert in here from when we talked about it last time, and it still hasn't triggered. So I'm still waiting for this gap fill on Sage, and it hasn't hit 79.80. It came close. Look at that. Look how close it came that day to my alert. Went up to 79. I was 80 cents away. Didn't trigger. Keith, do you think HD will get to 235? I've been staying out of. Home Depot. I was playing at Home Depot a lot in December. This month I haven't really traded it that much ever since the breakout. I do think that it's going to be 235. I don't typically trade these types of setups because, right now the top here is like 238. It's 232. It could get rejected at any time. So I like to have a lot more room in order to trade it. However, if it comes back up and it looks like it's going to squeeze, I will trade the breakout of like 240 area to the upside. I do think Home Depot is going to be huge. Housing is off the charts. The housing numbers are what really pushing what's Home Depot. The more homes sold, the more people going to Home Depot. And it's really having an impact on the stock price. Like, as you guys know, last week we had the new housing starts, and that's what really triggered this to go from 229 up to 232. Kind of break it up. That's why it went up so much. Is all the housing data is coming back super strong. So if the housing data is strong, Home Depot is generally going to have a good year. So, however, keep in mind, Home Depot did lower their guidance for 2020, so it's going to be interesting. Was it last quarter? So last earnings, Home Depot lowered their guidance for 2020, and that's what caused it to drop from its highs from 239 down to 210, to 211 area, 210, and now we're coming back up, and they have earnings on February 25th. So just be careful. So what I feel like what happened is they possibly lowered the bar, and now they can instead of hitting home runs, they just gotta hit to first base. It's kind of a trick. Apple was doing that for a while too. When Apple was starting to have a couple bad quarters, they started to adjust the numbers so that way they can start beating earnings again versus missing earnings, right? It's it's magic. It's what you want to believe. Expectations could be low, and then they beat, and people think they're doing well versus they were down from a year ago. Revenue's down from a year ago, so who knows? It's all marketing, We won't get too far into that, but yeah, Netflix is literally flat. Look, let's see here. Actually, I'll pull it up on Tastyworks because it's bigger numbers. Netflix, and look at these premiums right here. $13, $15. Those are gonna be sliced down to probably gonna be down to like $7 tomorrow. If it stays here, $7. Premiums will probably be cut in half. Man. Crazy. Well. All right. Well, that's about all that I got, guys. Hope you guys learned something today. I hope I did too. I know I did. Boeing is wrecking the booty, but the damage is done. The lesson has been learned. We're gonna move forward. Smile on our face. We'll be making some money. If you do me a favor, hit the like button. As always, stay safe, stay green. It's us versus herd.